I'm Simon Howard, Chief Exec of the UK Sustainable Investment and Finance Association. We do what the name says. We represent people at every part of UK financial services who have a belief in sustainable investment. The camera will show me looking very serious during Derek's speech because at UKSIF, I think it's fair to say, whilst we have a very supportive chapter of about 60 financial advisors in the Ethical Investment Association, the stalls here in the front row, which in Essex, we don't know enough about this key distribution group. So if we want to change the world and get more sustainable investment done, we need to learn a bit more about financial advisors. Now we're trying, and I always listen to them. I hear two conflicting messages. One is from Derek there, which is the regulator is a bit of a problem. The other from those, perhaps by coincidence, who are closer to the regulator, is no, things are going very well. There's clearly issues. The business model is changing under RDR. We're scratching our heads about what we should say about that to the regulator and to the government. And then into the pool we get the business about the pensions annuity and the need for advice there to people exiting their pension pots. There's a lot going on. I think it's fair to say I'm probably more worried than I was when I started a year ago as to whether financial advisors were getting a fair crack of the whip, whether this route to market was working. Serious things there, no doubt that will come back to me in the panel question. What I will talk about in a few minutes is what I think is going on in SRI in the UK more widely. And this is an unashamed pitch to urge you all to try and develop your businesses in responsible investment. I think it's a very interesting opportunity there. How big is the market? Depends how you define the market. UKSIF do a study every 2 years. We're engaged on that currently. We'll know in the autumn how the market has grown over the past 2 years. What we do know is because the IMA do some stats on their definition of ethical funds, a subset of sustainable. That market grew faster in sales and asset under management terms in calendar 2013. Sales have continued to be positive each month so far this year. Importantly, I'm seeing positive signs from several fund managers in the UKSIF community. I can't name them, it's kind of privileged information, but there seems to be more vim behind their efforts than there was 12 months ago, and certainly I suspect more than 2 years ago. At the institutional level, and the context in which we all swim, the Law Commission looking at fiduciary duty and charity law, and Comic Relief has changed their investment policy as a result of popular public demand. So I think the wider environment is increasingly supportive of sustainable finance. What strategies are growing? This is based on a very preliminary cut of the UKSIF data. At the institutional level, it's integration. It's people bringing consideration of environmental, social and governance factors into their process. That's getting a lot of attention. At a more retail level, the data at this stage suggests it's investment styles which we would call best in class or sustainability themed. I think the language in the Rayner Spencer Mills guide may be slightly different definitions there. But it seems, on this preliminary data, to be the value-added strategies, the more value-added strategies which are gaining share. And engagement and voting may be losing relative share. It depends on the final state of the data when we get it. But that's very encouraging. If people are beginning to think about their investment process and how environmental impacts play a part, if they're thinking of sustainability themes in selecting investments, I think you'll get better performance and better funds as a result of that. Innovation continues in the UK. Threadneedle launched their social bond fund a couple of months ago. Webb, who are here, at the request of some clients, added an income class to their funds. Very welcome indeed, I'm sure. Alliance, our sponsors today, did a very innovative roadshow around the country last October, I think it was. It seems to have gone very well. Peter's just told me they're up for a marketing award, not just for sustainable finance marketing, but more generally. And recently we had the fossil-free index range from FTSE and BlackRock. The fossil-free cause has a lot of traction among the students. It's a complex topic. They do see it as black and white and as binary, but there's no doubt they are passionate about it. And I'm urging UKSIF fund manager members, they're going to have to get up to speed with this. They're going to have to work out what their position is on it. But if we come back in particular to the retail financial advisors, what are your potential customers thinking? This is data from a survey we did for National Ethical Investment Week last October. A lot of it is in the Rayner Spencer Mills guide. But in effect, 2/3 of people want to be asked about their ethics, would react positively to being asked, what is your attitude to responsible and ethical investment? 43% of people say they'd like to move their money away from the bad companies. 34%, a third of them, would be happy to help build a sustainable UK economy. And there are some industries which they like. Now what's interesting is we ask similar questions to people in a pension fund context, beneficiaries of pension funds. We ask them similar questions for a different event in April this year. First of all, that second bullet point, 37% of people didn't know what ESG was, didn't know what environmental, social and governance issues were. I think this is a key opportunity for you, for the advisors, to differentiate. If you are the person who tells somebody what these factors are, who can make sense of the science which is reported in the newspapers and on the television, I think you get a better client relationship. I think you get greater loyalty. Of those who did know what ESG was, which was the phrase we used in the term, 61% again, very close to the 2/3 who want to be asked about their ethical views, they understand that these factors can have an impact on asset valuation. So again, the message is that there's 2/3 of people out there who want to be asked about it, and it seems probable those same 2/3 understand that these factors will affect the value of their assets, and that's assets across all classes, corporate bonds and equities. But there's also increasing work being done by UKSIF members in sovereign bonds. These things matter. If you want to buy the debt of a developing economy in Africa, you want to know if the government's corrupt or not. These factors matter. Public priorities, the things people are asked in the pension fund context, they want companies which pay the proper tax rate. They really don't like executive pay. This is a real problem in financial services. It's not a badly paying industry, but our end clients want executive pay tackled. They like companies which pay living wage. Having said that the students are hot on fossil fuel, the general public aren't. So I wouldn't advise you perhaps to take a fossil fuel product to them at this stage. Less than 10% interested in that. In conclusion, my last minute, you're going to hear more about SRI because it's got momentum in institutional funds. So there'll be steady news flow about pension funds and charities adopting this kind of thinking. That must build up the opportunity in retail for financial advisors. The opinion poll data suggests people are receptive. If the news is on this topic, the door's halfway open. The banks, I know because they're going to be working with us on it, are trying to rebuild their reputation. They're going to be talking about trust and values. Bang on in the sustainable, responsible investing space. There'll be a following wind coming from what the banks are doing. And as I say, mass market and public opinion appear to be going our way already. I'd urge you to consider aligning your businesses forcefully with responsible investment. I'll stop there. Thanks.